please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The Nikkei, in fact, is up close to around 180 to around 200 points. It's holding with some gains.
We are asking the NCLT court to consider whether, on the basis that we believe our bid is superior.
Current 20 DMA is also 10,638, and it also ties in with the recent high for the Nifty as well.
Nifty as well, up about 35. That's 10,520.
Let's see how it moves on from here on. 2.6%, 2.8% lower, now 3% lower is what we have on yesterday.
Technically, market is not ready to go down, but market is extremely well valued.
The increase in the yield where mark-to-market provisions will hit most of the banks. That is one factor more than the provision, which will impact the performance of all the banks.
The Delhi High Court passing very clear orders that all the assets stated in that affidavit by both RSE Holdings as well as Oscar Investments, they have now been attached and now will be liquidated and will be valued.
The market is up almost 80 points and it's looking pretty good, 10,570.
Okay, it's been a strong follow-up to what was a really strong start to the series. So first 2 days now looking really good, and of course a lot of people would ask, is this for real and is the correction over? We'll find out, of course, but for now things looking good. This is closing well. I'm Anuj, with me is Surabhi. Hi Surabhi, good afternoon.
Good afternoon, Anuj. So bulls marching on the street after February. I mean, it's been a brilliant start. I don't know, I mean, any complaints whatsoever, because once again the leadership is with the Nifty Bank. We've got mid-caps also participating. Auto stocks are revving up. I mean, we were talking about Maruti, Eicher, the laggards. Even they're back today. Yeah, so let's see, Surabhi, how things move from here. The setup this morning was that you would probably make a move towards the 20-day moving average, towards the recent highs. As we've been discussing on the Nifty, that high is somewhere around 10,638, 10,640. So let's see if that's taken out or not. But the risk reward, of course, for last 2 days was in favor of taking longs, and that trade clearly has worked. The banks are leading the move, as you pointed out. Advanced decline is stable at about 2:1, so there also things are looking quite good. And as other leaders like Maruti, Eicher also are running up. IT is down once again. So the risk on, all of this is giving you a feeling that the risk on is back on table. But as sometimes, you position yourself in this last hour of trade. Ashwini Gujral and Mitesh Thakkar now join us with closing strategies. Good afternoon. Ashwini, it's been a strong day today. In fact, now up 400 on the Bank Nifty and about 100 on the Nifty. You think, would you want to carry home the long positions or do you think profit should be taken home? What would be your call for last hour and, of course, stock-specific strategy?
See, first let me make the easy prediction that last hour we could have 70 to 100 points on Bank Nifty, given the way private sector banks are moving. So that is the easier call to make. On Friday I didn't think it was the real thing. We made money. Today I am thinking this is the real thing. Still made money. So who knows? So let's not get into that debate. That debate will probably get settled above, say, 10,630, 650. But, the way the market is still continuing to move higher for the second day running without any significant dips, these days, those two-legged corrections, sometimes they don't play out. So I am now on a 50-50 camp that maybe we cross 10,600, 650 and then everybody stampedes into the market, because the markets are calming down. There's no question about it. So everywhere where there are short positions, which is autos, private banks, all kinds of stocks which got hammered because of whatever reason, they are moving higher. And where there were long positions, the metals, the IT, they are kind of coming off. So for the moment, you have to remain long, take each day as it comes. But the way this has moved for 2 days, I wouldn't be surprised if it is the real thing, because we are dealing with a bull market. We are not dealing with a bear market. Having said that, I think on individual stocks, Axis Bank remains a buy with a stop of 545, target of 570. Bajaj Finance is a buy with a stop of 1640, target of 1710. And Oberoi Realty is a buy with a stop of 515, target of 540.
Okay, that's interesting. So you're going with the longs for the last hour of trade, Ashwini?
Last hour, and maybe we will carry, because there is no evidence of great amount of profit booking coming in right now. Let's see what happens at 10,600, 630, because the risk is it may get crossed, and everybody who's short, the real short covering will start beyond 10,630.
Okay, and just to follow up, why Axis and why not any other private bank, Ashwini?
See, Axis got smashed up, reached its 200-day moving average, and from there it's moving up. But really, any of the private banks could be bought, and there is a bit of tailwind. I think money is coming out of PSU banks. It's always been this way, but now it's a bit more aggressive today, and that is leading to further short covering. I think there should be great amount of shorts in HDFC Bank and HDFC. So once they start to get covered, I think Bank Nifty will fairly quickly cover its lost ground.
Okay, then you may want to stick with some of the private sector names, and as Ashwini is pointing out. By the way, I mean, all kinds of, hands are now coming on deck. So take a look at what Zee Entertainment has done in the last couple of minutes. Days high, 2% up on that stock. Something like L&T is racing to the highs of the day. UPL is looking very, very smart, 3.5% up move. That's Zee for you. So a lot of names beyond financials also really working well for the bulls today on the Nifty 50. Good afternoon, Mitesh. It's been a great afternoon for those who decided to go long on Friday, carry those positions home. What is your sort of reading of today's trend and, of course, stock ideas?
Yeah, good afternoon. So I've been maintaining that we will possibly test 10,620, 630 this time and even cross it. Maybe around 10,620, 630, you might take a day's pause or so. So in the morning also we advise going long even after the gap up, and I believe that this time, as I said, the indicator health is much better on the intraday charts than what was before. So I think this time there's a greater possibility of 10,625, 630 being crossed. Having said that, I think if you've been long for the last 2 days, around these levels, I think it's good to lighten up a bit and wait for that 50 to 80 point kind of dip to buy into afresh. I will not go all out and sell everything, but yeah, I think reduced position, take some profits off the table would be a wise idea. The stocks which I'm recommending are stocks which have kind of corrected and are just reversing on the intraday chart. So BEL is a buy with a stop at 152 for targets of 164, and Tata Motors, it broke that 365, 370 zone and again it has started to come up. So that's a buy with a stop at 365 for a first target of 384.
Okay, the market is now at the high point of the day, 100 points higher on the Nifty. The Bank Nifty has now hit a quadruple century, 420 points higher on that index. In the banking space, of course, a lot of stocks at the high point. HDFC Bank, IndusInd, Indian Bank has made a high of the day. ICICI Bank is nearly there. A couple of others are trying to get there. DCB Bank, for example. So looking good. Deepak Shenoy of CapitalMind.in is with us now. Deepak, good afternoon. You reckon the private sector banking correction is over, especially the large names like HDFC Bank?
Afternoon, Anuj. I think, I think right now the problem really is about, the fact that there are more of these skeletons coming out of closets. I don't know if the whole banking mess is kind of behind us or over. I believe that we're going to have a lot more revelations in the next few days. So I personally feel this will actually be a good thing in terms of understanding exactly how all the banks stand, but in the intermediate time frame we're going to have volatility. I don't think it's the end. I'm sure there's going to be a lot more, and private banks will also get at least marginally caught in this action.
Okay, all right, let's also welcome in Mr. SP Tulsian of sptulsian.com into the conversation this afternoon. Good to have you on the show as always, sir. A specific word on something like Amtech Auto. Obviously today with that statement coming in from Liberty House, that exclusive conversation we had, they said they're interested. Now in the past you have maintained that there are certain good assets even here. Just your thoughts on the way the share is moving now and what you would advise?
See, on this few assets, 5 steel account and 1 Amtech Auto, I have given my view, positive view about 4, 5, 6 months back. But now I see that at least, those who have been calling it as a dirty dozen or zero assets value are seen at least, seeing some kind of value seen, only looking to the bids having received from the strong hands. Maybe like Liberty House. In fact, in the morning also I've said for Amtech Auto that Amtech Auto, in fact, one should not see the financial performance of the company for last 6, 7, 8 quarters. In fact, see the financial performance if you really want to judge the exact potential, what kind of potential they have for their financial year, September ended 15 or maybe September ended 16, when they had full working capital and all that. Company is capable to give you a top line of about $2 billion, having presence in the many countries with multiple products. And in fact, auto ancillary is the space not for India, for the world over. And in fact, these kind of pricey assets, when you will see the change of hands coming in fact, earlier, even now, I won't rule out the possibility of the keen buyers being Mahindra's, Motherson Sumi, or maybe Bharat Forge kind of people, those who will be interested in acquiring MTech Auto apart from Liberty Group. And the kind of potential which Mr. Gupta of Liberty has indicated on MTech Auto, we have been taking that stand for maybe about 4, 5, 6 months back. As I said that, when there was a lot of pessimism having built on these NCLT assets, and now the stand is getting cleared because of the prospective buyer. And in fact, this is not an end of the story. In fact, story for all these NCLT assets, if you really want to play on, will begin from the first day of the new acquirer coming in. The day we will see that the company has got acquired by XYZ or Liberty Group, or maybe for the steel account by Arcelor, or maybe by JSW or Tata Steel. In fact, the real countdown for those stocks will begin from there. And I have said that in the past also, I won't be surprised to see them moving up by about maybe 50% to 200%, depends on the various companies amongst the steel stocks as well as on MTech Auto. So yes, MTech Auto is a pricey asset. I don't know the fate of the 4 subsidiaries, which will be like Metal is Forging and, JMT Auto kind of things. What will be the process of that, whether the acquirer will get those control of those 4 companies or not, is a difficult to comment, because the separate resolution process is going on for those 4 other companies also. But even if you take MTech Auto, it's an excellent pricey asset and a lot of potential seen once the new promoter comes into the company.
Okay, Mr. Sen, good afternoon. Since you're talking about Motherson Sumi, in passing, of course, your thoughts on the kind of rally that we're now seeing in names like Maruti, Mahindra and Mahindra, even Escorts for that matter. Do you think the auto correction is over, and is that a sector which is back on now as one of the leaders?
Yes, in fact, auto correction is seen over, and in fact, if you see the kind of corrections having taken place, particularly the 2 stocks, Maruti and Mahindra, I think Mahindra and Mahindra was victim of the tax planning also, where we have seen the selling coming in after share having gone ex-bonus apart from the general corrections, which you have seen in the frontline stocks. Similar is the case with Maruti also, the kind of corrections which you have seen making the stock to fall below 9,000. I won't be taking too bullish call on Escorts, because that has not corrected so much and it continues to, or will continue to remain in the range, because I don't think that it has much upside potential from going on from here, because of looking to the monthly sales number for the month of January. But yes, keeping the positive view on all the auto stocks, and maybe in the pecking order, probably I'll go with Maruti and then followed by Mahindra and Mahindra.
Really, it's the large caps that are blazing away. We've spotted a couple of them. Now there's Aurobindo Pharma that seems to be looking even better, gain of almost 2% on that one. Z Entertainment, of course, has been the big mover of the last half an hour. Let's get some more trading ideas going then. Sandeep Wagle is joining in. Sandeep, good afternoon. What's on your trading list today?
Afternoon, Surabhi. I would go with a buy in a Torrent Power, stop loss of 270, buy in a Indigo, stop loss of 1327, target 1378.
All right, thanks a lot for those trading ideas, Sandeep. Interglobe and Torrent Power, a couple of stocks. In fact, talking about Torrent Pharma is also doing well. Big jump in open interest. Bajaj Finance and Finserv, Deepak, both stocks at high point of the day right now. Your thoughts on these 2 stocks?
The interesting thing about Bajaj Finance actually, and we've been invested in the stock for a while, but that's also because of its relatively good underwriting standards. They don't they tend to be a lot more aggressive in terms of writing off loans while they turn sour, so that any recoveries will actually add to the bottom line. They don't spend a lot of time doing the arbitrage of writing off only a small amount and so on. So they recover NP, or they actually write off NPAs as soon as they can, which is good for a lender. Having said that, it is pricey. So you're going to have to expect the growth to continue at 35 to 45% for these valuations to hold. So from a momentum perspective, the stock has done well, but as valuations go, I would say one would have to buy over a significantly long period of time to deal with ups and downs, because a great company shouldn't all be bought at one shot.
Okay, by the way, just this move on Torrent Power, and this has the habit of making this move somewhere around 2:30 to 3 p.m. Just see the intraday chart of Torrent Power, and of course the entire power sector is buzzing, but Torrent Power in particular right now is up about 5.5%. Mr. Tulsian, any thoughts on the stock?
See, we have been liking two stocks, that is Torrent Power and CESC, and in the past also we have said for the reason that they are the integrated power company, because third was Reliance Infra for the Bombay division, then they moved into so many other things and EPC kind of things. So if you take a call on Torrent Power, an excellent stock, having distribution in Gandhinagar, Surat, Ahmedabad, and maybe in Bhiwandi, Agra. So this is a very with good business model with their own captive power generation capacity. Also, they've gone with a recently gas-based power project also, having commenced added the capacity of 1,000+ megawatt. So all these things, and in fact, this has been lying low for quite some time. FY17 performance was not so great, but if you see for the first 3 quarters of FY18, the financial performance has shown a drastic improvement. FY16 was an excellent year in the terms of financial performance. FY17, all 4 quarters were dull, and FY18 has started showing that kind of improvement. So probably taking that into consideration, I think the situation is going forward is going to be quite good. Q4 and Q4 and Q1 will always be seen as good quarters for the power distribution companies, those who are in an integrated play. So maybe one can keep an investment view with a view of about 6 months on Torrent Power, because still upside is seen in the stock going forward.
Okay, and what a move right now as we're looking at the charts this hour. Ashwini, I just want to go back to you on the auto space. I mean, we were just discussing it from a fundamental standpoint. Now, between, let's say, Eicher and Maruti, would you look at a long trade on anything? Mitesh, of course, picked out Tata Motors. Not just for the last hour. If you want to hold positions, is there merit in looking at either Eicher or Maruti?
See, there is merit if your expectations are right. These are not at the phase where they will go 5 times in the next 1 year, but definitely they can get very close to their highs that they touched. Maruti 9,800, 10,000 thereabout. Similarly, Eicher maybe upwards of 30,000, 32,000, etc. But I would say that these stocks will now consolidate and move in a sideways range rather than showing you big up moves. I think a much better stock is Motherson Sumi, which has corrected 25% and is now moving up fairly sharply.
Yes, Motherson has made a big move after that correction. Mr. Tulsian, before we thank you, your thoughts on OBC and the violent reaction by the market today, even though the amount was much small, but still down about 12% as we speak.
See, here it is not the quantum which decides the trend of or maybe the valuation of a stock. In fact, it is the term fraud, and people are worried that probably you may see these kind of skeletons coming out from the closet of respective or each of this bank, and OBC has not been in fact, we have been saying that we are keeping positive view on the larger PSU banks like PNB, where it seemed to have bottomed out, because the larger portion, even if the NP or the fear of losses goes up from 11,400, 600 to 12,500, 13,000 crore, doesn't make any difference, because they are backed by those kind of assets also. So these smaller banks, when you have these kind of things coming in, whether it happens with UCO Bank or Oriental Bank, you are going to see the beating seem to be continuing in the near term for the stock price as well.
Okay, all right, Mr. Tulsian, thank you very much for being with us today and taking us through your view on all the stocks that we have discussed. On that note, it's time to move on and welcome in our Alpha manager, Ronak Onkar of PPFAS Mutual Fund is with us on the show today. Good to be talking to you, Ronak. I want to actually start off with banks, because banks is the second biggest sector represented in the fund that you manage. And of course, one of the biggest holdings for you is HDFC Bank. You've got a marquee name out there. But given all this, the churn that we've seen, bond yields moving higher, the tougher NPA rules from the RBI, and of course the fraud, are you making any changes in your financial holdings?
Thanks for having me. So the reason we bought private sector banks is, one is the scale that they have reached over a period of time, and the trend of the public sector banks ceding market share to private sector banks is still continuing, and it will be a while till the balance shifts towards dominating private sector banks. At the same time, these banks have a strong retail franchise and they have a very strong fee income, And as the scale keeps on helping them, and hope they don't screw up somewhere in the lending side of the business by lending a little responsibly. I think if they control the risk on that side, most of these banks are very strong franchises, and they are very good businesses over a period of time to own.
Ronak, hi, good afternoon. The other interesting bit is you have quite a bit of exposure in pharma names. Dr. Reddy's, Lupin, Ipca, Pfizer. So, even other related spaces as well. So, do you think it's a stock-specific story, or in general, are you turning positive on pharma now?
So over a period of time, we've been tracking pharma, and what we have noticed is it's become so uncertain to really have a stable model, a financial model for any of these companies, because a lot of things keep changing dynamically. A company doing very well suddenly gets one letter from the FDA, and the stock goes plummeting, and you lose 50% of your value over a period of time. And that happens quite consistently, or has happened quite consistently in the pharma space, and we have seen that. So what we realized is, instead of having betting on just one single company or a few companies in a larger size of the portfolio, we will spread the pharma portfolio over exposure to say 4 or 5 stocks, where we know that the balance sheet is good, where the management has demonstrated an ability to scale their business and grow in other export markets, and they have low-cost production facilities available, which are temporarily out of commission because of the FDA issues. I think all these things coming together makes that idea favorable for us.
Okay. Of course, the fund is quite unique, Ronak, because you do have exposure to international equities as well, and the best of the marquee, internet technology names of the US, Alphabet, Facebook. We've discussed this in the past. But tell us about Indian IT, because we've seen this very impressive rally in the last few weeks. Do you like Indian IT? Are you looking to buy anything?
So we have been tracking that space as well. So I think pharma and IT have been the laggards if you look at the portfolio performances of many people over the past. And even the companies, the large cap names in IT have seen a steady decline of revenue over a period of time, or not significant growth over a period of time in the core business that they're running. And the reason I think is most of them are managed services businesses where there's a lot of pricing pressure for services because they're getting commoditized, and some of automation is also creeping in, and the clients are expecting that IT companies should take a cut in the amount of money that they charge for providing the same service, and which is understandable. So most of them have been moving to the digital side, and some of them, some of the companies in our Indian context don't have the kind of baggage of managed services like some other larger companies, and they have been able to be far more agile and nimble in terms of moving towards the digital space. I think those kind of ideas are good to keep track of and see how they gain traction over a period of time in terms of sales and profit growth.
Okay, by the way, just look at some of the stocks. Oberoi Real Estate right now up 18%, so big move on that. Ronak, on the market then, the big question, is the correction over, or do you think we have made highs for the year? Because that's where the jury is still out, and you have a divided house, of course.
Yeah, I think it's very tough to predict general market positions, and you can actually predict and be wrong the next few minutes. That's kind of the way the market is moving. So the way we designed our fund is to not worry about those things. In fact, just worry about the businesses we are tracking and the industries we already own, and see how the competitive plays are happening in that space. And based on that, do the bottom-up stock picking. I think it's easier to keep repeating that, but it's very difficult to follow through and hold a certain position for a long period of time. I think that is our competitive edge, and we'll keep focusing on that rather than just predicting the market trends over a period of time.
Ronak, finally, are you comfortable with valuations as of now? The reason I'm asking is that if I look at the portfolio, I mean, there's an interesting representation. For instance, Suzuki Motor Corp is something that you're sort of holding in. Nestle. Again, I'm talking about the international entities, not the Indian listed entities. So is that a valuation call? What's the reason?
Yeah, so if you look at Suzuki Motor, about 2/3 of their profits come from the consolidated subsidiary of Indian company, that is Maruti Suzuki, and they also get a part of the royalties that Maruti Suzuki pays to the parent. Also, they own the asset that is there, and at the same time, we also get exposure to the two-wheeler business of Suzuki. So all these benefits combined together, you have to pay just $28 billion. Whereas if you would want to buy Maruti Suzuki in India, you would be paying $40 billion. At a earnings multiple of say 16 for Suzuki and about 40-ish for Maruti. And if you look at that, it's clearly a divergence in terms of valuation for betting on the same market, that is the Indian auto industry. So I think that is a way we want to look at the auto industry right now, since this option was available and we have a fund structure where we can take advantage of that. At the same time, if you look at Nestle, it has been a while in the fund, and the idea was similar, that if you want to get the same level of growth, why would you pay so much in terms of earnings and cash flow multiples in India, whereas you can get the entire global portfolio and at the same time all the newer product releases that they do all over the world at a half the valuation at that time when they purchased it.
Okay, so, I know Surabhi asked you this, but let me just carry forward the discussion on IT. I think you're pretty early in the mid-cap IT game, Persistent, Emphasis. These stocks have had a big run. We just saw the move on Mindtree also, for example. You think structurally something is changing for Indian IT, or was this a case of the valuation just being out of the whack compared to the rest of the market? And from here on, do you still want to buy IT?
It's tough to understand whether it's played out completely, but from a business point of view, when we see IT companies, there is still a lot of room to change. A lot of the newer technologies that people keep talking about, they still aren't a large part of their portfolio. I mean, they are at the fringes about 10-15%, somewhere about 20% of sales come from the newer technologies which are seeing the higher growth. What we have to see is sustainably, can they deliver in terms of sales performance and productivity in terms of increasing profitability on those sides. And that is something we have to keep observing. I think market may react preemptively based on the valuation range in the past. But I think we have to keep a watch on fundamentals and see if it is really going to happen. So even a little bit of a move up and upside in these stocks is fine. But at the same time, if the numbers don't deliver over a period of time.
Well, the markets are doing well. Just want to point out JSW Steel is the one where we've seen a big buying in the last 5 minutes of trade. Just pull out the intraday chart of JSW Steel. It just looks a stock-specific move for now. 2.5% higher is what we have on that one. Ashwini and Mitesh with us for BTST calls. Ashwini, you go first. Thoughts on index and, of course, individual stocks. What are you buying or selling?
The index, I think, has held on all day, and I don't think there's any reason to give up a position. Surely, after 2 strong days, you could have, a sideways day just next to a resistance. But the way markets have moved, the way it's fairly broad-based, I think we should get past this 10,600, 630 type of zone. So even now you can buy into Nifty, Bank Nifty, and carry it home because you're just coming off of a resistance. As far as individual stocks are concerned, Kotak is a buy with a stop of 1,090, target of 1140. L&T Finance and Holding is a buy with a stop of 162, target of 174. And UPL seems to have bottomed out. That's a buy with a stop of 718, target of 740.
Okay. Anything in particular on JSW Steel, Ashwini? That's making a big move right now.
See, for the moment, in this move, metals probably look like they're taking a day off. But JSW Steel has crossed to new highs, and maybe the next target from here could be 350 to 360.
Okay, what a move on JSW Steel. Big spike coming in on that stock. Well, Mitesh, let's get to your ideas as well then.
So L&T Finance is on my buy list as well. It's a BTST with a stop at 164 for targets of 170. And Lupin, I think after a long time, is reversing on the intraday chart. So again, a BTST, keep a very tight stop at 812, look for bounces to about 840 odd zone.
Okay, fair enough. A lot of these individual stocks are making a big move at this point in time. The market might be slightly off the high point, but ICICI Bank is at high point now. Maruti is at high point. Bajaj Finance and Finserv both are at high point. And right now, a couple of these steel stocks are making a bit of a move intraday. But it's Monday, and that means it's time for Midcap Mania with Nigel D'Souza. Nigel?
Well, over the weekend, I was looking at a lot of sinks, and in fact, I visited a lot of outlets as well, and I went and had a look at various sinks all across Mumbai. And this is the company that came on my radar. The company that we're talking about is Akrasil. This is what they do. They're primarily into sales of sinks. They sell really under 2 brands. And for this year itself, the stock had a very, very good start. But from the top, it has corrected nearly around 15 to around 16% approximately, as the graph is telling you on the screen. They sell under 2 brands. One is Carisil. That basically is these basins. And the second one is Sturhagen. That, in fact, is the bathrooms as well as the fittings over there. In terms of sinks, you'll say, what's so different about this? Well, bulk of the industry and bulk of the usage in the industry is for stainless steel. But what CRISIL really specializes in is quartz sinks. So that's something that they specialize in. And there are only 4 players really globally that produce quartz sinks. And in India, there's only one company that's doing that, and even in Asia, and that company is CRISIL, selling it under the brand name of CARISIL itself. And you'll say, well, it's such a small segment, but it's been growing. Just going by their capacities, they have been building capacities, and utilization levels as well are fairly high over there. What's so special about quartz sinks? Well, from the company's point of view, it's a higher margin product, obviously because it's more expensive, and the asset turn is nearly around 3 times. And from a user's point of view, well, the longevity is something that that is being pitched to clients. Now, these are the different types of sinks. I'm sure you would not have looked at it, but I've also been looking at it over the last few days. The first one that's up for you on the screen is the quartz sink. The second one really is the one that most low-cost housing as well uses. That's known as pressed steel sinks. So the other 2 on the screen are stainless steel sinks that you're talking about. But the first one, that's the most expensive. And normally when you go to redo your house, that's the time when in fact you buy it. But now, in fact, there are various high place developers that are using these quartz sinks as well. If you take a look at the revenue breakup, well, at one point of time, more than 75% of their revenues used to come in from the quartz sinks. Now, that is reduced to around 67% because the appliance business over there, that has been growing. And I think we should get a couple of pictures up for you. Now, in fact, they're into various kitchen appliances as well. In terms of geographic breakup, primarily, they were only export-oriented. Now they're eating into the domestic market, and 33% of their revenues come in from the domestic market. And take a look at the revenues. They were doing 17 crores. Now they're doing more than 50 crores in last year. And this year, in the first 9 months, they've done revenues of what they did in the last entire year as well. In terms of exports, United States and UK, that's what accounts for bulk of their exports as well. In terms of revenues, EBITDA, as well as PAT, it's been a good CAGR performance in the last few years. So 20% CAGR on the top line. You have in terms of EBITDA as well, it's roughly around 20%. And in terms of profitability as well, it's roughly around 18% or thereabouts. What the management has put up on the website is that they're looking, currently they'll do around 200 crores, that they're looking to do at a revenue of around 300 crores. Then they're looking at 500 crores, and then they're looking at around 1,000 crores as well. What I understand is that in fact the land is there, but is the demand strong enough? That's something that we can only see going ahead. You'll say, how are they going to do this? What's their balance sheet looking like? Well, the debt in the books, including working capital, is only around 70 crores. So balance sheet is fairly okay. The dealer networks as well have been picking up. The distribution network as well has been picking up. And in terms of UK, they had purchased a stake in one of the subsidiaries. Now they have nearly around 98%, and that business as well has been growing. Finally, dividend payout has been fairly good. They've been paying out roughly around 18 to around 22% in the last few years. If you take a look at the EPS as well as the dividend payout, that looks quite good. Promoter holding at around 42%. And important to note, you have a German-based company over here that's known as Schock. Over there, they have some technical collaboration. They have roughly around 9%. So that's the stock. Basically, it's into sinks, and in sinks, quartz sinks is something that they specialize in. Back to you.
Okay, all right, Nigel, thanks very much for that. I mean, one thing for sure, I will go back and check the kind of sink that I have in my house as well after that. Thanks very much. Just a clarification, this is not a stock recommendation. It's a piece of research and some data analysis that Nigel has put together. Well, as we move forward, let's actually look at a story that's now coming in. Torrent Pharma is looking to raise about 2,000 crore rupees via a QIP. This comes close on the heels of Torrent acquiring Unichem's India assets. Nisha Podar is joining in with more details. Nisha, so a big fundraising coming in, Torrent Pharma?
That's right, Surbhi. In fact, sources do suggest that at the moment, Torrent Pharma's management, in fact, for the first time, is really speaking to the investors to go ahead with the QIP process. So they look to raise 2,000 odd crore rupees. I would say it's still conservative in terms of the amount because they are really looking aggressively at acquisitions. A few years back, it was Elder Pharma. Then it was Unichem Labs India assets that was done last year. And now they are aggressively also looking at Zentiva's generic business assets, that is Sanofi's overall assets which are being sold in Europe. So what I do gather from sources with direct knowledge is that they are really looking at really going ahead in the final rounds for bidding for Zentiva. There are other global players against whom they are really pitching their bid. The deal size could be as big as $2 billion. So ahead of that, Torrent Pharma wants to be really strong in their balance sheet, clear off the past debts because of the Unichem Labs assets buyout, and be in a strong position to raise more funds for a big pitch for a European buyout as well. So those talks are going on, and this particular QIP should happen very soon if the market participants give them the right kind of pricing that they are really asking for.
Okay, Nisha, thanks a lot for that. That's Torrent Pharma. The stock is up